Okay, so wow, right? $1 million, there's a lot of things you could do with that. Personally, I think I would, pay off my college loans, buy a car, and buy a nice house, because with those three things out of the way, you're likely to have a very stress-free life. However, those aren't the sexiest opportunities from a finance perspective or an investing perspective. So before I give my main pitch, which involves a media trifecta, I'd like to briefly mention some other strategies that are currently economically viable. In a market that has seen the Dow lose a third of its value over the last year, some would argue that there are serious opportunities out there for those with the capital to seize them. Some examples of these would be buying debt of AAA rated companies that is trading for cents on the dollar. Others would perhaps search out cheap equities. And then maybe the most bold would even play the role of the bank and deploy their capital to firms unable to access credit markets and take senior claims yielding above average rates of return. From a trading perspective, it is possible to profit off recent market volatility. One trading strategy that might pay off is a straddle on a major equity index such as the S&P 500. By buying put and call options with the same strike price and expiration date, you limit your downside to the price of the options and the upside subject to volatility, which I see as something we can count on in the near future given the foreseeable cycle of bad news followed by government stimulus. Although I realize that diversification is crucial and would not spend $1 million on three different equities in the same industry because they're highly correlated, my main pitch does focus on the entertainment industry. Certain forms of media have traditionally been recession-proof. However, analysts are suspecting that even the silver screen and home entertainment may not perform in the worst economic downturn that we've seen since the Great Depression. Going to the movies used to be the most cost-efficient recreation activity in hard times. Today, box office prices are higher than ever. But in my opinion, it is unlikely that Americans will turn away from the big screen and DVD rentals and cable as the economy continues to lag. There's a chance that more traditional forms of entertainment will be adversely affected by free competition such as Hulu.com or the internet. However, this is primarily the Web 2.0 generation. And in my opinion, other media consumers will stick to what they know and shift their consumption to the kind of content they'd like to see during hard times. There are certain studios out there that look well positioned for growth with key brands in the near future, such as Marvel Entertainment, Lionsgate Entertainment, and Viacom. It is the unique market that Lionsgate serves and the incredible popular brand that Marvel Enterprise delivers that make them attractive buys. Both of these equities represent performers that may still have value to unlock. My pitch for Viacom represents, however, a speculative buy. Since the partitioning of Viacom and CBS, and since 2006, Viacom has lost 50% of its value. Viacom has also developed connections with both Marvel and Lionsgate, which is a good thing. For example, Viacom's Paramount Pictures holds the right to distribute the next 5 Marvel films, including the hugely successful Iron Man franchise and the Marvel team-up to come, entitled The Avengers. Viacom has also entered into a strategic partnership with Lionsgate in the cable space. The covariance of expected returns between these firms has most likely increased with their connections to one another. And a bet on all three is therefore riskier than three less correlated media stocks. But initially and qualitatively, it does not seem like a bad bet, especially considered from a long-term investment horizon. One could take stakes in all three with allocations to maximize expected return while at the same time grabbing a slight bit more diversification than if one were to invest in a single entity. So the entire thesis, therefore, is based upon branding, what will be popular, and what people want to see in the coming future. And I think these three collaboratively in the film, distribution, home video, and cable space are a good bet. Thank you very much for listening.